In this short video, guys, I'm going to explain everything you need to know about spread betting. Stick around. Hey traders, a very warm welcome to you. Alright, so let's explain spread betting in this quick 5 to 6 minute video guide. So if you're new to spread betting and you've hit this video because you're like, what's spread betting all about? This is going to get you the answers that you need, and maybe consider subscribing for more information about trading, spread betting, etc. Right, okay, so the big difference between spread betting or other vehicles is this. You are trading in a tax-free wrapper. So unlike traditional shares, we have to pay capital gains tax. You bought some shares at 500 pence or £5, then up to £10, you doubled your money. You'd have to pay capital gains tax. Of course, you've got release, etc. But in theory, that's what you've got to do. Spread betting, includes the name, guys, it's betting. So just like if you went to a bookmaker and you bet on a football match or goals or an outcome or whatever, and you won money completely free of tax. So it's a tax wrapper that's considered a bet. So the UK government at the moment is considering it as a bet. Of course, it can change, but it's been like that forever. So unlikely to change, but hey, you never know. Government could do what it wants, right? But that's what it is at the moment. So that's a good reason to trade or bet or get involved with the financial markets via a spread bet, and why spread betting became so popular specifically in the UK. Okay, so next thing is flexibility. So if you think about traditional buying shares, right, you have to open a trading account, a share account, and you buy shares. Let's say you want to buy some Apple. You'd have to have a US dollar denominated account for that. You'd have to buy it in US dollars, convert your money to US dollars, then just buy Apple. And maybe you want to buy Lloyd's Bank, so you'd have to go and have sterling. Maybe you want to buy some crude oil. You'd have to then buy some futures, or you have to go and buy all sorts of a mess. Spread betting, one account. One account denominated in GBP, so you stick your money in pounds and you can bet on the direction of all of those instruments and thousands more just by using one simple account. So your money, profit and losses in GBP, very simple. You make money on Apple, you bet in pounds. If it goes up, great, and you're long and you're making money on up bet, great. You think crude oil is going to go lower, you've got a sell bet, you make money. So you can trade multiple instruments from one account. So very, very simple. It's very flexible in terms of what you can trade or what you can bet on. Just as I alluded to a moment ago, is all sorts of things. You've got commodities like crude oil, platinum, gold, silver, corn, cocoa, coffee, a never-ending amount of commodities. Currency pairs, those are exchange rates like euro against the US dollar, GBP against US dollar, yen, never ending, guys, Swiss franc, you name it, guys, Mexican peso, whatever country, it's there and you're able to trade that. You've got the equities as well. Equities are your stocks and your shares like Apple, Facebook, Twitter, Snapchat, Netflix. Those are the US ones. Then going to the UK, perhaps you've got some banks like Lloyd's, Barclays. Maybe you've got some supermarkets like Sainsbury's, Vodafone and telecommunications. The list goes on. You can bet on those as you like. And then of course you've got your indices as well, like your FTSE 100, your Dow, your DAX, your Nasdaq, your Hang Seng, whatever you want. There's massive amounts, which is just beautiful because it allows you to trade from one account, many things. Okay, so flexibility, hugely flexible, and of course you can bet on the market going up or the market going down. Now, one thing that's different compared to, let's say, a fixed odds bookmakers, you would bet a certain amount. Let's say you bet £100 on a 10 to 1, and when the event ends, you either win or you lose. Okay, if your horse comes in, you win the money. If the horse doesn't, you don't win the money. Or a better example might be, let's say England win a football match. If they win, you bet on them winning, you win. If they lose, they don't. The difference with spread bet is it's open-ended. So open-ended means the more the price goes higher, if you bet on an up bet, i.e. you've bet on the price going higher, the more money you're going to make. So in theory, if that thing just keeps going and going and going every single day, theoretically, you're going to make money every single day that goes higher and higher and higher until you close the bet or close the trade. That's the difference. You get pulled automatically out of a fixed odd bet right when the final whistle goes. So-and-so's won or so-and-so's lost. The bet is ended. With a spread bet, it's open-ended. It will carry on on until you close it, or until you're in a certain type of bet that has an expiry sometime in the future. Might be 2 or 3 months in the future, might be longer, but most people bet via a rolling cash, it's called, which means that every single day it's renewed, and it will carry on indefinitely in your favor, which is great, but also can carry on against you, which is why you've got to be mindful and be able to cut those losses quickly so you can let those profits run but cut those losses short. So over the longer term it plays out in your favor. So super flexible, open-ended, which is a good thing and can be negative if you're not careful, so you've got to be careful with that. But generally speaking, if you treat it with respect, it's a good thing, because while you're right, you're more right. So how do they make money? So it's called spread betting because it's what's called a spread. So just like a car dealership, right? If you go into a car dealership and you want to trade in your vehicle, they might look at it and go, oh, you know what, that's worth 10 grand. But they might then have it on the forecourt for 15. They might give it a wash and stuff and add a little bit of value, add a warranty, etc. But they might put on a used car on the forecourt for 15 grand, but they're giving you 10 for it. So just like many businesses out there, they're making money from the spread in between. So this is exactly what's happening with the spread betting brokers. They will quote what's called a price, and the difference between the two is a spread. FTSE 100, for example, let's say it's trading me at 8,000. The spread for most brokers, and by the way, if you haven't got one, go and check out our link to our preferred one in the description below. Open up a demo account and have a play around. But 1 point spread's about right for the FTSE. In other words, if you want to buy the FTSE, you've got to pay 7,999. If you want to sell the FTSE, you're going to sell it for 7,998. Just like that car example, whatever car that might be. Let's say it's an older BMW 5 Series. You want to buy it from the forecourt, it's 15 grand. You want to take your identical one in, they give you 10 for it. Bit of a widespread that, but you get the idea. So that's how these companies are making money. They're making money from the spread. They're hoping that lots of people are going to buy, lots of people are going to sell, and they're making money in the middle. They're making that 1 point in the middle, and also they've got all these different instruments as well, which they're making money from, and they make some money from holding charges overnight, because you pay a little bit of a charge overnight to hold a position. So if you wanted to have a down bet, which is the beauty of spread betting as well, you don't have to just bet on prices rising. Of course, prices go down. In fact, they go down a lot quicker sometimes than they do going up. Let's say you think the FTSE is a little bit too high, you think the economy is going to roll over, you want to bet on a bit of a recession, you could do a sell bet, or a short as we call it, and you'd sell it at 7,998. Any position size you want, £1 a point, £2 a point, £3 a point, £4 a point, is bet in points. So it goes down to 97, that's 1 point, 96, 1 point. You get the idea. So you decide on how big, just like if you're a fixed odds bet, how big you want, how much money you want to make if you're right, how much money you want to lose if you're wrong, effectively. So let's say you did £10 a point sell bet. Let's say this thing now collapsed and it went down, you were quite right, and over the next 6 months this happened. You hit the top of the market and you were fortunate enough to see this go all the way down back to 7,000. You would make 998 points times, let's say you were doing £10 a point, you made £9,980. A nice profit from a falling market on a trade. Now, of course, it went against you. Let's say it went against you and you cut it 100 points loss and you were at £10 a point, then you're going to lose £1,000, right? You get the idea. And of course, you can trade smaller than that. That's the other thing about the flexibility, guys. You can trade small. You can trade something like 50p a point if you want to. Some brokers allow you to trade less than that. So 50p a point, and it moves, say it moves 100 points or something, it's a small amount of money. So you can trade with a small account or a large account. So very flexible in that way. Alright guys, that was a quick overview of spread betting. If you want to find out more, if you want to go into more details, we've got loads more videos where we go into far more detail and more analysis, to give an example of a trade, up bet, down bet, some of the things you can trade, some strategies, etc. So hit the subscribe button, have a little look through the videos and see if there's something that helps you get going. But definitely, go and check out the link we've got in the description below. Open up a demo account, play around, just put some fake, you're going to get a fake money account, you play around with it, see what happens, see what markets you can trade, see what kind of position size, see what tickets do, and get a feel for it before you put any money at risk. Whatever you're doing though, take care and see you in the next one. Keep your risk managed. Bye bye.